I see that, especially when it comes to seeding. In order to really do the seeding job correctly, you need to be longer term capital. And I'm sure you've heard from many people that liquidity is really a premium right now. Now that, on contrary, provides the opportunity for folks like ourselves who are willing to lock up capital for longer periods of time. But really, people are putting a premium on liquidity rather than quality. And until the focus goes back to quality, I don't see a lot of people putting capital out.
Can you give me an example of somebody you backed and why?
Well, the first manager that we backed is a firm called LRV Capital. It's three partners from a firm known as Millgate, which was one of the original Tiger Cubs founded back in the early 90s. The reason why we like them really is a number of reasons. The three principals were partners at that firm and had been a partner at that firm for many years and had spent a decade managing that exact same strategy. The second reason is we think they're very differentiated, not only in their investment approach, but in the mandate. The mandate is global ex-US equity long short. So they do everything in the world, frontier, emerging, and developed, but not in the US. So we don't know of any other firms that do that. And then third, they have a dedicated and known track record for being able to make money on the short side. And it's very few people can do that, not only in the US, but importantly overseas. And so the combination of those three things and our comfort in them and our confidence in them made it our first investment.
Hedge fund industry, as you know, underperformed the market overall. Obviously, there are exceptions to every rule, but up about 6% was return on average. What's the hedge fund community doing wrong?
Well, I think what the hedge fund community is doing wrong is very similar to what the long-only community was doing for many, many years, which is they're too benchmark sensitive. Very few people are willing to really take independent views, preferring more to invest along with the herd. We prefer to identify people who are really behaviorally wired to be contrarians and to think differently. But the reality is that most people who manage money are very comfortable making the same bet that everyone else is, maybe sizing it a little bit differently. And so as that type of mentality bleeds into the hedge fund space, you can expect more mediocrity.